Hello guys, glad to have you on board again today. We'll do as usual, and we're going to start covering the Bitcoin and having a look at the daily chart time frame first. So now that I've been changing, we've been breaking down that breakout area, restoring the prices to the lower boundaries, which is right here, and just found the support at the expected price area. Just remember what I said back then. I said if we were about to break down the 7,800 again and not pull backing on that price, we're probably going to have to get there and eventually a little bit lower, but we shouldn't get below 7,200. This is the next breakout area. This is where we shouldn't get to. If we're going there, it means that we're not having any bullish support. And that will be the second breakout in a row. And at that point, I'll be a little bit more worried about the future of cryptocurrencies, and I'll have to review my entire scenarios. But I think right now what we just made yesterday is an interesting scenario as we're looking around the trade line support, so meaning that we should find some bulls in there. Right now the momentum is slowing its pace. That doesn't mean we're going to have a reversal, but at some point this is something I'd like to see today. So today is going to be an interesting day to trade. Yesterday we've managed to close below the previous day low, which means not the big of a good signal to buy right now, because still need an extended ranging in the current pricings. But the fact that we've made a lower shadow candle still suggests that we found the early bulls. I mean, bulls have been paying yesterday. We'll see if they are strong enough to push the price to a reversal. In that case, we need to break up yesterday's high points and terminate with a bullish close. We need to close higher than that low, and we need to break yesterday's high to confirm the fact that the bulls are in control. At the current stage, it means bears are in control in here, bulls are in control there, and just going to fight in between. So we've got the breakout area, which means we're probably going to have to work in there for a bit. Probably remaining below 7,800 is going to be a resistance at that point. But I'd like to see the price heading toward that resistance instead of heading back to the support once again. I think we might be ranging in there for a few days. That will be the option where we are lacking of bulls, and we're just going to range in there for a while before probably going to get to a new bullish outcome. From what I can see right here, it's just an ABC correction. A, B, C. That's it. We are in support area. We found some bulls. If the market is really bullish, we should get to the resistance pretty soon and break them up. I mean, that's just the way I think it is. So I've been buying Bitcoin yesterday. You know, I'm still on that. So tiny amount of Bitcoins. I have much more Ethereums right now, and we're going to talk about that scenario right after. So the fact is that right now, I don't see that much of a risk. We've been making a pretty long and extended down move in terms of momentum. I think at some point we're going to have a bullish momentum. We still haven't broken down the previous low, which means if we are failing in here, ranging a bit and finding some bullish momentum, we'll have bullish price, bullish momentum, and we have already broken down the bearish sine wave. So from what I can see and say right now, and I already said that, I think that thing has been triggering a little bit too early. Shouldn't have triggered in here, but triggered there instead, which leads me to believe that this is where we should have the breakout. And normally that gives us a single target, which is right here. If you just switch that bearish signal that just triggered a little bit too early, it gives us there. If the initial bearish signal would have been triggered there, the target, by breaking it, I mean, would have triggered the bearish signal, breaking it to the upside, we should have the target right up here, which means this is maximum zone in which we should remain bearish, and this is the area in which I'd like to start searching for potential bearish entries. Okay, so as I said, and I've been posting on TradingView, the fact that I think the market is dangerously subject to potential bearishness to come forward, but I never said we would be selling right away right now. Could be the case, but from what I can see right now, what I have in front of me in here doesn't really suggest that we're nearly close to this. Okay, so we've been testing a Fibonacci retracement level in here, which means we're still bullish if this one holds on. So it's still pretty soon and too early to tell. Today is going to be an interesting day. Either we're going to confirm the bulls are in control, or we're going to need to extend the ranging price area near that bottom. So today is interesting, but I don't think we nearly have to fear potential drop downs, nor we have to fear potential upward moves. So I don't think that we need. I think we we won't have bullish pump forever and making 10% day, nothing close to this. Could be an option, and once again, everything's possible, but I don't see that really reliable in terms of price action, and neither we should have another drop today. So I think the best we can handle is kind of maintaining ourselves below 7,800, but not necessarily reaching out below 7,500. So kind of a rangy structure should be happening right now, and then probably in the next following days. Every time we go there, the buyers show up. Every time we go there, the seller, no buyers show up, meaning we cannot break the resistance. And whenever we'll be mature enough to break that resistance, we're probably going to find some strength to get to making new highs. Okay, so new highs than there. It's just ABC correction. As long as we stay in that mood and far from the resistances, there's nothing to celebrate. We're just waiting right now to see if the bulls are in control and taking it over slowly, bite by bite, to push one more time. And obviously the next time to me is the time that I will get into searching for bearish entries, probably near between 9,000 and 9,400. But we'll see about that. There's still pretty much a lot of moves ahead. So it's still, first we've got to take care of that move, see if the price will spawn bullish or not. In a 2-hour chart time frame, we've had a bullish sine wave cycle triggering plus a bullish confirmation. We've got a nice divergence in here, but nothing really I would take care of. So I would say we still have some room to go slightly lower, just trying to fuck up some stop losses. We've got a technical price in here at 7,400 that hasn't been tested. It's that support in here. As I said, the stop loss obviously needs to be set below that price. We shouldn't get below 7,200. If we're going there, meaning it's two breakdowns in a row without testing a resistance, that will be the red flag you don't want to get yourself into. So if we're getting there, it means the market's no longer bullish, and that will be great danger. We're pullbacking out of that big trend line, which means in here we should find some bullish support, and this is what I'm waiting. So it can take some time. Don't be too aggressive. Don't think that this is going to pump right now, right away. Could take a couple more days to work out that price area before eventually doing so. The market I have more interest on right now is the altcoins instead, because the altcoins are very far from the latest resistances. We've been working on some very long-term supports. If we just have a look at the Ethereum in a daily chart basis, so we're basically not even going to talk about Ethereum. I'm going to take the entire altcoin sector. So as I said, I think altcoin times is right now. I mean, interesting time on the altcoins is right now. Doesn't necessarily mean that the altcoins will be bullish or bearish, really too soon to tell. But what we had yesterday is pretty interesting, because on the altcoin index, yesterday we've been making a lower shadow candle closing into the body, closing into yesterday's high to low range. So we've been closing into the previous day's candle with a lower shadow candle, and that is really interesting. Doesn't necessarily mean that the bulls are in control, because we also have an upper shadow candle. So this is just a doji, and this will require a confirmation today. So we've got multiple options in there. Either we remain inside yesterday's range, not breaking the high, not breaking the low, means that we're going to need a couple more days working out that price area and executing some volume. But as long as we maintain daily candle closes below this and above this, we got nothing to worry about. We're still making higher highs, and at that point, that's a good sign. It means that we've been giving all the gas we had to the bear side. Look at this. We've been contracting the momentum, trying a bearish burst out of a squeezing momentum, which means we're trying to install a bearish trend. This is clearly what the market's trying to do right now. If it fails, once again, think opposite. The market generally is going to give you either the signals you want, or you have to trade the opposite signal. I want to buy. Okay, I've been choosing that I wanted to buy. I can be right, I can be wrong, but in terms of trigger signal, I'm searching for bullish signals or invalidation of bearish signals. This is bearish, clearly, but this is weak bearish, which leads me to believe that the bears, no matter how strong they think they are weak. And any time we're going to hold on and take over that support, we're going to take down the resistances afterwards. So what I have in front of me in terms of icons is nothing like a strong bearish momentum, but a very weak bearish momentum that has already burned probably all its gas. The sine wave is right here in the reversal area. So it means if we're not breaking a support at that point, then it means that there's no trend. It means that we failed the squeezing momentum, probably going to have to break on the opposite side and breaking the resistance instead of the support. It means that we try the support. If we do it, I'm out. If we fail it, I'm in the right side, and I'm going to take over the stop losses of those who've been selling. It means they've been trying hard, as hard as they could, but the bulls are stronger, and if the bulls are stronger, it means that we're going to have to push to higher prices. I mean, this resistance has probably already been tested, so I figure out that somehow the next resistance has to be right here, and that's the scenario I've been playing. I've been choosing to put my money onto Ethereum, even though that might not be the smartest choice at that point, but we'll see about that. But Ethereum right now I think is an interesting investment. So we're working around that potential support. It's not the strongest, but once again right here, same scenario. It's just that Ethereum is the guy, is the one that is weighting the most into that index. So this is the reason I've been choosing to pick this one more than others. But I also have been choosing to put some XRP into my portfolio, and that's the only two. I've got those three: Ethereum, Ripple, and IOTA. And now I'm 60% Ethereum, 20% Ripple, 20% IOTA, and I still got some tiny amount of Bitcoins. But we'll see about that. Right now, I'm more Ethereum. It's a highly speculative scenario, so once again, just don't follow me blindly and saying, okay, if feels buying, I'm going all in. It's not how it works. I mean, right here, we had a breakout level, and we broke it down and installed the candle close below. So from what I can see right now, momentum is bearish. Prices are bearish, yet we're in a bullish reversal area on terms of sine wave, and this is what I want to see. This is my last chance, because what we have in here is a double bearish signal. So right here, we clearly have a bearish signal. Okay, in terms of technical pricings in the daily chart time frame, this is where we got a strong resistance. Okay, so really a strong resistance, and I think if we break it down, what we'll have is a bearish extension of that thing, which means if you just take it, okay, you go search the lower low, which is the one probably we've been making in here. So probably yesterday, I hope is going to be the lowest low. If you just do that, I mean, sine wave target's just going to be there. It's a perfect resistance, and guess what? That's a price we've been highlighting into the altcoin index. So if we get there, it makes sense to me that the Ethereum is going to be the leader, and it's going to go there. It means a 600 target for Ethereum. Buying right now, it might be crazy interesting, because you have pretty much a 40% return. It's not going to be the big of a deal anyway, but I think we can make that pump and just stay there. It's approximately a 50% retracement of the bearish impulse, so that's nothing good compared to Bitcoin. I mean, in terms of price action, Bitcoin hasn't made 50% upward move, but in terms of price retracement, we will just retrace approximately 50% on the Ethereum, where the Bitcoin has just retraced to those levels and probably about to reach out to 76.4, okay? So I think we'll have some retracements lower than the Bitcoin has been doing, but yet I think the altcoins, because of their volatility, might be producing more gains than the Bitcoin did in terms of percentage return. Okay, so I think it's an interesting scenario, but very volatile. As I said, 40% expected return out of the current prices, which means if you are putting a 5% stop loss, you're just totally out of any risk management. So you have to put a very large stop loss on those scenarios. The target is pretty fucking rewarding, so really be patient. You know, I've been buying Ethereum in here. I just reinforced yesterday, which means I've got an average price in here. I can afford a stop loss down there. It's not a big deal to me. And this is where, for now, my invalidation is. Doesn't mean I have been putting a stop loss at the market. Nothing close to that. Just the fact that right now, I don't really worry, even if we had to break down the support. All I want right now is to see the momentum picking up with the prices. And whenever I'll have this, I'll get to putting some more money in. For the moment, I'm just sticking there, waiting patiently to see some price confirmations. That's it for now regarding Ethereum scenario. So just patiently waiting in here. We've got a lower shadow candle, but we've been closing above the previous day low. Okay, below the previous day low. So this is not a bullish candle, and today really needs to show some strength regarding the Ethereum. Otherwise, we might be heading toward trouble. So I want to see some bulls at play in here. And if we have a look at the 2-hour chart time frame, the one I'm trading on, we've been testing that support, reacting pretty much bullish in there. I want to see a resistance broken up. So in here on Ethereum, I don't want to have another bearish pullback. I mean, the momentum has been neutralized after a fucking trade line hitting minus 40, minus 35. 5. This is something you don't see generally. I mean, the trend has been really lasting for way too long, really too extended. We've been triggering all the stop losses at once. So it's a really brutal price action. We've got another breakdown in here in which could trigger some extended stop triggering. But I think if we go there, we'll have to pay $394. So anyway, if we keep on going to the downside, I think that's the final move no matter what. And I've got multiple information suggesting that for some reasons we might be nearing the end. So it's clearly this, I think, we've reached out support at 100% extension of the previous bearish impulse. So it's either we find a support in there, or we're going to have to find $394, $394, $95 as a support area. But as you can see in here, we've got a strong technical cluster. I don't see that much reasons for us to try and triggering more stop losses. So I think if bulls are at play right now, they shouldn't allow that new bearish movement. But we'll see about that. I mean, everything's possible. And you need just to let some room for the market to play that area safely, not taking your stop loss. So if you're putting too much money in there, you're going to force yourself to putting a stop loss too close to the current prices, which means if for some reasons we were to have another bearish outcome, then you're just going to get stop lossed. And even if in the end, the market is reaching to the target. So you'll be really pissed off if it's not the case, simply because you would have put too much money in there, too much risk, which means you will have to put the stop loss at a defined price. You'll be down the road, okay? Just don't do this anytime. When you're speculating, if you're putting too much money in there, you're taking too much risk, and the market can take you down, and it generally will do it. So let some room for the price to work out the area. I think all we've been doing yesterday is a market excess, trying to get the stop losses of those who've been putting too much leverage. So don't be one of those. Just be patient. Put the leverage when the scenario is validated. As I said, the scenario is going to be validated at the moment we retrace back to a resistance and reinstall prices higher. So I want to see the price making a breakout. As you can see, we got a validation level in here. I want to see the price reaching out there. First, I want to get into a resistance, having some kind of pullback, and then I want to see the break up of that volume area. Whenever we get to break that up, I think this is the moment you can forecast the price. I've been working out that area to the bullish side. Okay, so I would like to see the prices remaining above that price area and not testing this one. I'd really much like to see that bullish reactivating in the next following days. But as I said, don't be too aggressive. If we go down one more time, or if you put a stop loss just right below the previous low, we could just go there, make a few dollars below, and just fuck up your stop loss. As long as you don't make prices to $404, there's nothing you should worry about. So if you want to put a very tight stop loss, you can put it right below that level. But really, I would suggest you put yourself a stop loss below the next breakout level, which is $384 per Ethereum. Okay, so regarding cryptocurrency level sector, this is all I have to tell. Really requires patience, but I think if you want to put some money, I think Ethereum is a good candidate. You can also select Ripple and IOTA if you want to spread the risk, but I've been choosing Ethereum because it's the strongest in terms of market cap, but obviously I could be wrong, but I think one of those three is obviously going to be the big performer, Ethereum, Ripple, or IOTA. We'll see about that. I just wanted to not put my entire money into the single asset, but I've been putting much more into Ethereum than the other two. So now moving on, we've had the Tesla's result. They're pretty bad, or at least not that good. Yes, they're making a little bit more cash. They've been burning less cash than expected, let's call it that way, but the result is still negative. And what the fuck? I mean, it's like Elon Musk has been selling for years the fact that the corporate will be profitable at some point. It still isn't, and yet everybody's pricing that shit very expensive. So you can do whatever you want. As I said, Tesla is nothing close to something I want to invest on. And I'll just be clear on this. I mean, if you're paying for a corporate that's not making profits, you expect that corporate to be a game changer. It's nothing close to it regarding Tesla. Tesla is just a dream catcher. It's taking the money of stupid guys ready and stupid enough to buy those cars, and even those who are much more stupid to buy the asset prices. So you do whatever you want. I think this is just hype trading. People are buying Tesla because they like Tesla. You don't do it that way. When it comes to finance and asset managing, you don't do emotions when you investment. You don't invest into something you like. I mean, it's like stupid guys who are just buying Apple right now because they like Apple. They got money and they say, okay, Apple's a good corporate, is a great corporation. It's too big to sell. It's gonna go up forever. And plus, I have an iPhone and I like Apple. I mean, what the fuck? If that is your investment strategy, I'm obviously going to take your money in the end. It might be a matter of time, but obviously in the end I'm going to take your money. Even though I might be proven wrong right now by just selling Apple a little bit too early, but believe me, the day is going to go down, you're going to give me your money, and I'll be richer than you will be in the end. That's how it is. So really think it smart way. If you want to buy asset right now and shares of Apple and Tesla and things like that, just because you use them and you like them, or if you've seen a Tesla down the road and said, oh, that car is really great, I should give them some money. I mean, what the fuck? That's not how you do investment. That's how you do emotional investment. And I've tried to teach you guys the hardest that I could. And whenever you put emotion into financial decisions, it generally ends bad. So you can buy that damn Apple right now or buy that damn Tesla. It might be rewarding and get you happy at short terms. It's not going to end well. I already know that. And all those who are putting their money in there, I'm going to take your money. I'm probably certain, it's not a certainty because nothing ever is going to be certain. But the more you repeat investments like that, using that strategy, that emotional strategy, if you put it at a statistical outcome, the more you'll do it, and the more I'll do what I do, the more odds I have to get your money in the end. It cannot be the case on that specific asset. I might be proven wrong into Tesla, and you might be proven right. But anyway, the more you repeat that, the more odds you'll have to be negative return, the more odds I'll have to get positive return, which means no matter how long you trade, I'll get your money. If you trade like that, I'll get your money. Or you'll have to make a lucky call, lucky shot. You get into buying Tesla, taking the gain, and just walk yourself out there. And if you do this, that's the only way you're going to get profitable. But I will be profitable in the end too. I mean, that's not your money that I'm going to take, but I'm going to take someone else's. That's how it is. I mean, just think it. The rational choices, emotionless, just pure rational decision, risk management, and think it that way. Who the hell would you give your money to? To the guy who is buying emotionally, or to the guy like me who is doing it with a strategy, with experience, who is doing that job for years? Who the hell do you think is going to get the money in the end? So now think smart. If I'm telling you not to buy that shit, just please don't buy. I'm not telling you to sell. As I said, and I repeat and I stand on this, it's speculative, and those who don't like or are not favorable to risky trading, just don't do anything is the best choice right now. But following the stupid guys who are buying right now is the worst choice you could make ever. And this will cost you a lot if you try to play that game. Okay, so the corporate is making really a little bit of profits. It's been missing the consensus, still negative. So normally anybody should buy something like that. But for some reasons the market is doing so. So we'll see about that. We'll see how it is. I mean, but I mean, really, fuck it. It's like we're no longer pricing something. We're making minus $3 per share, which is an enormous loss. And god damn it, people are buying that shit and giving it 7% higher pricings. I mean, yes, we've been selling Tesla aggressively the latest weeks. So we've been preparing for bad numbers. And it appears that for some reason Wall Street thinks that the numbers weren't that bad. I mean, think it twice. Is it good? No, it isn't. So why would you like to buy? It's not buying this. It's just, at best, we're just... Sorry about that. we're just retracing to get to new sell entries. So I might be taking a stop loss regarding Tesla, but that's a stop loss that is not going to cost me anything, because as I said, my stop loss in here is costing me nearly zero, and I'm just going to surrender all the gains I had, and that's a shame, because that was very nice gains, and I'm very, very pissed off to have let them go. I should have taken more profits on the downside. I decided not to, because we had that ongoing breakout, and I said, okay, we have some chances to see worse than expected numbers, and the market will sell a bit just to open below the previous support. That I've been failing. I've been taking risks, and the market is choosing the opposite side. It's something I'm used to. I'm agreeing with. I'm not fighting it. I mean, the market is retracing. All I'll do is basically waiting to get the pullback, and I'm going to sell again, just to get to the exact same targets, but doing it in a different way. I'm just waiting for a pullback, selling again, and I'm going to target lower levels. And we're going to have to break this, no matter how, no matter what. We're going to get there, I think. So it's just the how that is concerning me right now. How are we going to get there? I might have been wrong regarding the projections I've been making, but I don't think the targets are wrong. So it's just a matter of timing that I've been wrong-footed. So it's just like that. I'm going to surrender the gains, but because for some reasons the market is buying that shit. I don't know why. I don't really get that, even though the fact that that Wall Street right now is just bloody hell going to the downside, and we're going to talk about this. I mean, equities are not performing right now, and as you can see, Tesla is not something that the investors should buy into a risky sector, into a risk-off mode. To a risk-off mode, generally Tesla might be the first one to be sold. So I'm about to see how the market will react to those levels, actually, with the cash market, not the fucking damn speculative market of cash and the after-hours pricing. So we'll see about that. We might eventually open plus 7% and just finish at zero tonight and finish at the exact same price and just sell the hell out of the pricings all day long. I wouldn't necessarily be surprised. We could even open plus 5%, plus 7% and just lose 5% today and finish there tonight. I wouldn't necessarily be surprised. I mean, if Wall Street's bleeding like it is right now, I mean, you can expect a dangerous session today. And really a dangerous session. Now we're going to move in there, because I think this is where the things are at play. Look at Wall Street right now. It's like pissing blood, and it's not good. We're breaking. We've got a bearish momentum. The trade line is not even existing, which means we're breaking not even a bullish trend. We're breaking a trend that's already bearish, which means we're probably making wave 3 kind of pricings, and that's not something you want to buy. So if Wall Street's bleeding and about to bleed out, I mean, because the target of that breakout is right here, meaning we're going to break down support, we're going to reach out to stop loss area, so it's an area we've been highlighting before. If we were to bleed capital to get there, we're going to trigger stop losses, which means we're probably going to have to trend lower. And this will mean extension of the previous impulse. So we're going to go there, meaning we're trending lower. Do you see the possibility of a trending lower market on a bullish market? I don't see it that way. So which means to me we're going to get there at least, not to say we could eventually go lower than that, which means 1, 2, 3 extended wave, which means we can expect a 4 to 5 afterwards, which means we're going to get to the next stop area, which means we're probably going to have to break that down too. So just be rational right now. Do you really want to buy such market that is kind of a risk-off mode? I suggest you think it twice. Not buying right now might be the most rational choice. We've got multiple dangerous elements. This is the thing I've been sharing to you yesterday, that graphic, that set of graphics. I'm just going to delete this so you have a better... No, sorry, I'm going to put it back in, but just going to move it aside. I'm going to set it right here, okay? So we're just changing. Right, what we have in here is the repo market average rate. I've been telling you about that market for a long time, as I said, and just to set things really, really straight. Lots of guys like to call me a perma bear, or someone that just keeps on searching what's wrong and what's going wrong forever. So I'm selling forever. No, I'm clearly nothing close to this. I'm just a trader, and what I'm doing, I'm going to show you the big difference between a trader and a perma bear. The perma bear is the guy that will always look at what's wrong, and he's going to tell you this is wrong, and this is wrong as well, and this is wrong as well, and this is wrong as well, and we've got a pile of shit, and these are all the components of that shit pile. The trader instead is going to pick up very precise things. And as I said that for a month. You've got proofs. I've been saying this all along since the end of 2017. I said the Q4 of 2017. I said we've got multiple risks, but the ones I'm really concerned about are the repo market, the junk bonds, the gold, and volatility. These are the 4 quarters I've been following for months. I'm just waiting to find the tipping point, the reverse point in which the market is going to switch to panic mode, and I think we're nearly close to do it. So this is why I've been buying volatility on the lows. This is why I'm about to buy gold as well. I'm still buying gold actually, but I'm still waiting for the gold to validate the reversal, and whenever we'll have this, we'll switch to risk-off mode, which means no matter how deep Wall Street's been trying to fuck you up, it's not going to work out. I mean, everything I have in front of me right now is suggesting that we might have a risk-off mode, a switch to risk-off mode pretty soon, not to say might already be at play regarding what I have in front of me. We'll have bearish breakdowns on SPX, we've got a bullish VIX, we've got a gold on support, we've got a repo market that is already at dangerous levels, suggesting speculative and greed, high speculation and greed is not necessarily possible right now. And worse than ever, the junk bonds have been selling a resistance just yesterday. I was really concerned about this one. I just told myself, if for some reasons the junk bonds were about to get to the major resistance, I really want to see that one sold off, because if we're switching to optimism, then we could get to one of those 4 just playing against the other, and as you know, Wall Street's trying to get at least one positive and to just talk about this one and keep on pushing the bullish trend and whatever. So it's either right now we'll have a bullish reversal out of this and the junk bonds are bought, but I don't see a damn reason for the investor to do it. That will be the worst choice to make, actually. Buying junk bonds into a risk-on mode, into a risk-off mode, will be the worst possible choice. Normally, we should see the investors going in there, switching to panic mode, and probably going to sell the junk bonds. This is where we got the most risk. So this is the riskier asset, and this is where we should see the earliest signals of a market about to sell off. Then the second one we should get to signals onto, I think, is the VIX. I mean, this should be the most reactive market. Then the VIX should pick up. And as you can see, the VIX has already picked up today. So VIX is picking up. Junk bonds are sold. We're on support to the gold, which means at some point we can try to chase some stop losses, but the gold is about to get to the bullish side anyway, anytime. Can go slightly lower. I don't really care even if we go into 1200. We can go there, but we will obviously get higher at some point, and anytime we're going to cross over the mid-range, we're going to turn into dangerous areas in which stop loss will have to trigger on the equity market. And the money will flow in there instead. It's a risk-off trading scenario that's about to trigger. Buying gold, buying VIX, selling junk bonds, not taking cover into the repo market, not asking money into the repo market, and obviously that's a quarter that is not suggesting Wall Street's going to higher. It's more likely a scenario that says Wall Street's going to bleed capital again, and it's just getting started. Now we move into the SPX, and you'll see what I say. Okay, so basically bearish breakdowns, not the good sign. So if you want to buy, first you want this to be invalidate. You want to make new candle closes higher than that. Otherwise, option that I favor myself is the fact that if you take a daily candle chart, okay, what you have in front of you right now is what I've been thinking. I've been messing around trying to figure out what the hell was at play at Wall Street. Is that thing bullish, heading toward historical highs, but forgetting the massive sell-off of the massive end of economic cycle sell-off? But to do that, we need to go to historical highs and lowering the volatility, narrowing the volumes, and then just crash the thing off, or we just get a market catalyst that just take care of this for some reasons, Trump or whatever. There's so many reasons for us to find a bearish catalyst, but it's just kind of a black swan scenario in here. So you cannot predict black swan. It's just that if for some reason we make a historical high, something goes wrong because we've been piling too many risks, and some of those risks are showing up actually to be real. Let's say, for example, we go there thinking that the trade war is going to end well, and for some reasons we figure out that the GDP is just falling apart because of this. For some reason it could be a black swan and the market's just selling off instantly because of this. Option number two, we just keep on pushing for multiple quarters, let's say 1 to 3 quarters, and in the end we're going to have negative profit returns, and which means we're going to have to sell off the market top. We cannot hold on into the market top if profits are not rising. And as I said, we've already made the profit top, so I think it's just a matter of 6 months before we get into negative profit return. And whenever we get that, prices cannot hold on to stay into higher pricings. So that's just mechanical. But we also have the risk of creating a bubble. But as I said, very tiny risks to see this. I mean, cover assets are showing demand for cover instead of heavy greed. The repo market is not enough, is too pricey to get into creating an asset bubble. I mean, the Fed, no matter how hard Trump is trying to say they're doing wrong by rising rates, if you listen to Trump, he's basically saying, okay, you're too tight on the economy. You should let the retail investor get in and buy very expensive stuff, saying ruin themselves and creating a nasty speculative bubble. That's what Trump is saying. Just let it go. Let them buy very expensive shit to get ruined in the end. As on the opposite, the Fed is just saying, okay, we've got overheating economy. We don't really want the people to lose too much money and getting into very deep recession afterwards. We'd rather like to tighten the policy right now just to have some room to eventually face a potential risk of recession. And in order to face that recession, having some room to play without putting out some enormous amount of cash out there as we've done in 2008, we have to tighten the policy first. So what the Fed is doing is what it's supposed to do. I know many people are criticizing the Fed, but what the damn hell, this is the best ever central banking job that has been done for years. I mean, if you compare it to other central bankers, look at Mario Draghi. He basically said, okay, we're going to go on forever. We're trying to pull out, but anytime we try to do it, you're selling our equities, which means, oh, okay, we might keep on doing it forever. It's just like the Bank of Japan thing. They've been starting and don't know how to stop. The Fed have been doing it. They've been taking the gains out of QE. They've been rolling it over perfectly at the perfect timing. They're raising rates when they should do it. I mean, in terms of driving the economy, I mean, I don't like what the central bankers have been doing with the QE. I don't like that. And I know we're going to pay the price at some point. But if I have a clear sight at what's been done all over the world, I mean, for sake, the Fed has been doing by far the best job in terms of central banking. They've been playing the timings so fucking well. They've been investing right at the right timing. They've been pulling out right at the right timing, as the ECB have been 2 years late into putting the QE in place. And now they're paying the price, and they're too late into their tightening, which means Eurozone might be at risk because of this late timing. But the Fed's been doing a great job. The choice of QE wasn't the best choice back then, but handling QE now by the Fed is done with a pretty nice and decent way. And I wanted to say this, okay? So we're going to have to pay for QE at some point. It's a price distortion, and as I said, price distortion always have to produce negative effects. But handling the thing, preparing to get those negative effects have been done by far the best way by the Fed. So anyway, that's set apart. The scenario was, if we don't go there, we're going to have to range. But the ranging scenario is going to save us some precious times afterwards. So we're just going to get there. Triggers to stop losses, so we're going to get there at least, to the blue area. This is the target of the range scenario. If we're failing in here, and we're obviously doing it right now. I mean, if today we're going to have to close there or even lower, means that we validate the scenario expected, meaning we're failing in there, we've been trying as hard as we could, it doesn't work out, we're back in the range, and we're going to fuck up all the stop losses at once, get to the lower boundaries of that range, and see if we can find some bullish outcomes into here. or see if we can extend, or see if we want to extend to fuck up the stop losses. We've been making a lower high, which suggests generally we're going to make a lower low. And the C point should get there, probably there, or eventually there, but I don't see the price getting much lower than that. The initial scenario to me was just trying to find a B point. When we were back then, I was forecasting the C points to go there. These were the targets I was highlighting back then. The market just correcting, and we were about to buy afterwards. Okay? Then I said, okay, probably not working that way. We might have a B point in here, still highlighting the same target on an ABC correction, but this time heading the same way, heading to the same place, but with a different scenario. Okay, I was still forecasting the same prices. Right now it's no longer possible because the B point is approximately at the original point, which means generally the C point cannot be extended that much. It generally is near the original A point or slightly below if we can trigger some stop losses, and we might eventually just get there. I mean, we take that entire blue area, and I think right in here buying US equities might be a right choice because the scenario have changed. We haven't got to the market top, which means right now we might have some bubbles bursting. Probably the Nasdaq bubble is about to burst, but I don't think the SPX, which means the entire US economy, is just going to fall apart. I think the entire US economy is going to suffer another drawdown, but that's it. Unexpected drawdown. I don't know what could trigger the market sell-off, but at some point, anytime it's going to start, we're not going to stop it. I mean, it's going to bleed capital again. We're just going to have headlines at the Wall Street Journals or whatever, trying to find out why the hell the market is selling off. But once again, they're going to tell you why after it happens or when it's already at play. Once again, I, as a speculator, have been telling you this in advance because this is my damn job. I've been telling you since we've started that year that 2018 will be a volatile, rangy year. I mean, if for some reasons we were about to sell off to get there, I might be the only person who was right about that year scenario. Everyone was saying, okay, we're going to have a pretty nasty bullish 2018. We're going to make approximately plus 12% return because that's what the statistical things are suggesting from the past markets. I mean, God damn it. If you listen what they just said a few days ago, all the analysts, okay, they've been said, they just said, if we have a bullish summer, meaning from April to June, if from April to July, we get a bullish return, we generally have a bullish return on the year, and we'll have a positive end of year. I mean, yes, so what? Because the market has been doing this in the past doesn't necessarily mean it's going to do it today. And I'll be so happy to see the capital bleeding after stupid investors have been buying heavy amounts of ETF at the end of July. They've been buying a market top, they've been buying a resistance, thinking we're going to go to make historical highs, and now we're about to fuck up all their stop losses at once. Okay, so I'm pretty much happy to see that if we're triggering a range, we're going to do it nasty. We've been planning all along this, and that might be the timing to go into reinforcements. I'm going to watch out closely because we're trading the European session right now, and I want to see how Wall Street is going to react at the open. Because if for some reasons Wall Street was about to buy, I want to have at least 1 hour of cash market at play on the US session to be a little bit more confident into buying and to selling, that bearish breakout. But if that bearish breakout is a good one and is not a range breakout, we're going to be there tonight, which means tonight we're going to be minus 1%, already minus 70% in, which means we're going to make a minus 2% day. This is not something that happens in a bullish market. And right here, you will be really fucking crazy to buy. You can buy. I mean, that will be a possibility because you'll have a sine wave target. And if you are bullish and want to buy that market, you want to buy there, but certainly not there, and you just want to let the market go down. But believe me, after a 2% down day closing at the low, you don't want to be a buyer either. So if we're closing at the low, just don't buy. If for some reasons we go there and having a rebalance at the end of that day, you can consider eventually making a tiny, tiny long position. But if you want to buy, this is where you want to do it. But right here, to me, it's a stop triggering area and nothing close to a buying support area. So we'll see about that. That's the technical area, and if you have a bullish buyers, I'll totally understand you to buy in here. I won't, and I think the market will keep on pushing to the downside. Just simply, if you have a look at the daily chart time frame, for those who are trading market profile, volume profiles, things like that, you know this. When you see that, You know that things are not going to be pretty. You know this is a range. We've been putting a lot of volume in here, which means right now the range is obvious. This is the middle part of that range, and we're probably going to have to cross it straight away. We're not going to make stops. Probably expect something like that. We could be just there in 2 days. Okay, so don't be surprised if that happens. I've been warning you about this for a long time. If you've been buying that damn Tesla, Apple, or shit like that, these are the ones that might fall the most. So be prepared for eventual problems in there, and problems might come from the Nasdaq. So watch out closely for the pricings today. It's either Wall Street is buying it out, and they really should do it, but if for some reasons today we were about to close below $2,790 for an SPX pricing, I mean, you don't want to remain a buyer on such market. We're probably going to have to drop lower. So watch closely for today. It's going to be a really interesting session, most likely ahead of tomorrow's NFP. That's probably going to be the big market catalyst. It's either we hold on that support and we're going to get to historical highs afterwards, or we're just falling apart in a couple of days and we're going to have a pretty fucky bloody Monday ahead. Once again, if you're buying and if for some reason we were to close the week in here, just have a look at the weekly chart and what it will look like. If we do this, please don't hold the positions on a weekly basis. Don't do the overweek thing. If for some reason, even if we close just like that tomorrow, it's expecting a bloody Monday ahead, and you don't really want to hold a weekly gap. Okay, so if you're exposed to very risky assets, things like Apple, things like Tesla, things like Nvidia, Amazon, all the giga caps, anything that is wading into the Nasdaq, if you are exposed to this and if you see a bearish close on Friday, just don't hold the weekly gap. It will be really dangerous for you on Monday, and we're clearly risking a bloody Monday like we had back then. Okay, so this was a bloody Monday. Expect us to have the exact same thing if for some reason we were into the same scenario by making a weekly bearish candle close on Friday. So basically the NFP is going to be the game changer. If for some reason it was a good news and the market is buying it, then good for the buyers. You'll be right, I'll be wrong once again. But that's how it is. I can't be right forever. And you can't be right forever either, which means at some point I'll be right and I take the money. That's it. I mean, right now we're trying to figure out what's going on with the quartet, as I said, gold and whatever. Another scenario that is doing fucking pretty well right now is this one. It's totally validated. As you can see, we're about to have a damn nasty bearish week next week, but I expect this to be because of the yen and not because of the euro. Right now it's the euro that is wading into EURJPY. But that scenario, I've been clear about this. I'm leveraged 4 on that scenario. I've been taking the reinforcement yesterday. So I'm fully leveraged on this one. And I expect the gains to come forward, which means I'm going to take fucking huge gains out there. And this is what I'm trying to teach you guys out there. When you pull a scenario and the scenario is just playing out the way you expected, this is where you want to put leverage and make huge amount of gains. When it works out the way you expected, put some reinforcement and pay for that scenario to produce nice gains. When you are speculating and you're proven wrong, just give away the tiny stop losses. Even if you have to give 3 stop losses in a row, someday if you've done a good job, you're going to be right, and that time you want to put reinforcement to get 3 or 4 times the money you could have tried to put it in at the beginning on a speculative scenario. So when you lose 1. When you gain 3 times the leverage you get. 3 times the benefits, and you can multiply it with the leverage. If you're putting some leverage on a validated scenario, you're going to multiply it again. Generally, I have a 1-to-12 ratio, which means I can lose 10 times. If I get to win the 11th or 12th, I still get positive return. And of course, if I just lose 2 or 3 times and works out the 4th time, I get much bigger gains than the tiny losses I've been taking in between, which makes me a profitable trader in the end. But once again, you should know about that. I mean, I'm trading in front of you guys for months right now on a daily damn basis. So normally you should see that coming right now. Whenever my scenarios are working, I'm doubling down on those. I'm reinforcing the position and I'm taking huge gains. Whenever the scenarios are not working, I'm just stepping back, and sometimes I'm just giving away the stop losses. That's how it is. That's part of the game. Okay, so that being said, I've got nothing else to add today. We'll see how it plays out. The gold is trying to break down the support, and that could relieve some potential money to eventually support the prices on the equity market. So this is the reason why I'm not getting all in right now with the U.S. equities. I really want to see the gold responding today, the market switching to risk off and selling equities, getting money into gold and buying yen and things like that. And whenever I'll see this, I'll be confident enough to double down on U.S. equities and taking reinforcements to get leverage in there as well. I mean, right now it's too early. I think I need to wait for a bit, but I'll get into leverage trading into the SPX as well. If the expected scenario is triggering and that we're following up on those bearish breakdowns, then I'll just double down and put the money. Okay, that's how it is. I've been waiting for a long time. Probably I've been waiting since then to get the bearish. I got nice gains in there, but not the one I expected because I wanted more gains. I tried here. Finally, I thought maybe the good one. We'll see about it. I mean, if this one's not the good one, and for some reason we were to buy the overlap in here once again to get historical highs, then that simply I will get another set of stop losses. In that case, not going to be losses, just going to be giving away the gains. Meaning I have the perfect price on NASDAQ. It's been shorting right at the top. Got good price on the SPX as well, which means if this one is good, I'm going to take huge gains. If this one is wrong, I'm just not going to give a stop loss, but not going to get a gain. Means that I'm just going to give away the pending gains I have right now. Okay, so it's not going to be a loss in terms of capital. I'm not going to lose anything right now on the SPX. Because I have good positioning, which means no losses are possible right now. I'm out of risk. It's just that in order to put some additional risk to those scenarios by putting reinforcements, I want to have clean, decent confirmations to avoid reinforcing too early, getting caught into lowering the stop loss and have to pay a loss in the end if the scenario has to be invalidated. But what we have in front of you is not good. I mean, right here, right now, it's not looking pretty for U.S. equities. They really have to buy this out today because, as you can see, the breakdown is right here. We're just right here. So if we're breaking that down, that's game over for Wall Street. If we're making candle closes below that price, I really don't see how we can just fall apart and take down all the stop losses. First set of stop loss is in here, second set is in here, and third step is the long-term stop loss right here. So we'll see. It's a 50-50 scenario right now. I've been putting the cat in the box. And as you know, it's kind of a Schrodinger scenario in here. So just put a black box. I mean, right now, if you've been taking a position, it really is that way for U.S. equities. Okay, you just go there and you put a black box in here. Anytime you make a candle close out of this, you'll have something to trade with. But right now, you just don't know. We're trying the bearish side. We'll see if that works out. If that fails, we're probably going to have the bullish side release afterwards. Okay, so be aware that right now the market hasn't been taking the decision yet. But we've got pre-signals that suggest the money is free to flow in the gold, into silver, to short the US oil. I mean, it's just, we're just waiting to have the switch in which the money is going to cover buying the VIX, buying the gold, and buying the yen, and getting out of our equities just to get to cover for a big nice drop on US equities pricings, just to play the range. I mean, selling high or covering the asset prices for a potential drop, and just make the losses you will take by holding the equities. You'll have to you're holding equities. I mean, that's probably what's at play. Guys are not selling their equities. They're just going to sell part of their equities to put that money into VIX, into gold, and make the gains out there to pay for the pending losses of the remaining stocks they'll own. That's just it. Right now, for an asset manager, the goal will not necessarily be to profit from the downside, but just not to lose from that potential downside, to just double down buying again when you are on the bottom and interesting prices. All right? So thinking that way, think it rational instead of emotional, and just buying because Tesla is giving not that bad results or things like that. It's nothing close to a rational decision. It's just the worst choice you could make by just trading like that. So I'm going to take your questions and we're going to move on. So market forecasts in English. I'm going to put you the replay of yesterday's session right away. ignore the haters. I don't know if there are such things. I have pretty much a very tiny amount of haters, actually. Regarding the numbers of you guys who are following me right here in TradingView, I was expecting to have a lot more haters than I do have, really. So I'm not saying, okay, haters, go full on right now. I'm expecting you. It's just that I'm surprised not having more than that. That's a good news, and not something I'm going to complain of. But yes, haters are part of the game. I don't give them a single credit. I don't give a shit about people criticizing me. I know what I'm worth. I know how a good trader I am. It's just that I'm trying to share for free, and that's maybe the only reason people are not trolling me that big. I mean, I'm doing it for free, so what's the reason to lose your time for someone who's just doing something for the general knowledge? I'm just sharing knowledge, so at some point you can try to criticize me if you want, but that's nonsense. If you just don't want the knowledge, just move on to something else. And you can troll somebody who's trying to sell you a damn coaching for 5,000 euros who's actually not teaching you anything valuable out there. So go troll those persons. I'm pretty much happier if you're doing it. I'm not taking any donation, okay? That's not going to happen. If you want to make a donation, you'll make it to my next project, the project I'm going to launch after making Pro Indicators Terminated. I mean, when I will have teached out all I had to teach to people, I'm not going to teach you guys forever. I mean, I've got subjects I want to teach to share with you, knowledge I've been accumulating, and I'm going to share. This is what we're doing throughout the live rooms. But basically, at some point, I'm going to have shared all I had to share, and I'm not here just to talk forever. And at that point, when everything I had to share will be shared already, we can make some practicing sessions in which we're just going to apply what I've been teaching to you guys. But my job out here will probably be done, and I'll have to move to something else. And I already planned the next step, and the next step is going to work into the humanitarian sector. I want to put my money out there to help people out. So if you want to make donations, you will make donations to that corporation, but certainly not right now. So I'm not taking donations simply because I shouldn't know. I wouldn't know what to do with your money. So I don't need extra money, once again. That's thankful for you guys to want to thank me. But once again, if you want to thank me with something else. I mean, it's just like somebody a few days ago just tell me the exact same thing. I took a nice gain thanks to you. I want to share that gain with you. And I said, I don't care about your money. Send me something that seems to be valuable to you. And that's more important to me. I mean, just send me something real, not just money that I don't need. I mean, I can buy and literally not everything I want, but I don't need that much thing, okay? I have what I need, and I don't need a much more. So you can send me money, it's just going to die into an account and serve no purposes. So either you wait to help me and donate for the next humanitarian corporation I will create in the next following years, or you just send me something that seems to be valuable to you. I mean, it could be a wine bottle or whatever. Just send me something that is produced out there where you live, something that has value to you and that I don't know. Surprise me. I mean, if you want to send something, you just contact me into private messages. I'm going to give you my address, no problem. Okay, so that's how it works. I mean, if you want to send something, that I totally agree. If you just want to send me money, I don't care. Just take the money and use it the way you want it. I mean, you're going to make a better usage of your money than I could do if you just send it to me. Yes, thank you. So, Phil, you're truly an asset to the trading community. Okay, thanks. I'm gonna just move it. So it's really nice when you guys are putting the thanks in here. So don't mind me if I'm just passing those messages. Okay, I'm reading them. I really thank you for those. You can keep on posting those. I'm not just passing those because I think they're irrelevant. It's just that we're only 1 hour long on that video, so I'm just gonna move on to people who have questions I might require an answer, and not just a thank you. The ETH stop loss today is 404. Yes, as I said, Big Root Games, I'm not using stop losses. I do put stop losses when I go to sleep, because when I sleep, I know the markets can move, and moreover, the cryptocurrency sector, which is generally moving overnight because most of the capital is detained offshore, when and generally it is in Japan or Korea. This is where most of the asset prices are trading. So we can have some brutal move throughout the night. So this is the reason why when I go to sleep, I put a damn stop loss. And I said it, and once again, just for the purpose of transparency, I'm just going to show you something. Let me just pause the replay for a second. If you just go there, that's right in the Discord. I've been posting a message right yesterday. I've been putting my ETH stop loss for the night at 338.8 euros. So I've just been saying you what I've been putting my stop loss for the night. I said you, and specifically, I don't panic, just waiting to see how it goes tomorrow. Those who can handle stuff there because of too much leverage, you have two options depending on your risk profile. Option where you brace yourself and hope for it to play the good way, or you calculate how much on the ongoing trade you need to take down to be able to handle a stop at the same price I do. Remember, I'm not here to give you just gains and winning trades. I'm here to teach you how to become a trader, and that means handling the risks. So the thing is, and I've been clear on this, I gave you my price just to let you know how far the stop loss I've been putting. But just to set things straight, and I've been always clear regarding this, let me just get to Ethereum's, for example. So as you can see, it's just pulling down again today, so it's not doing great. I wanted to see how the market will react today, and from what I can see right now, it's not reacting the way I expect. So I might be adjusting the risk level once again, but the thing is, why do I teach you guys not to put leverage when you speculate? It's to have room for adjustment. Adjusting the risks is necessary if you want to get a more profitable trader. When you're a beginner, you're going to have to suffer from it because you don't really know how to assess the risk. You're going to learn it the hard way by making mistakes. And this is why I don't want you guys to put leverage on the beginning, because you're going to make mistakes. And what's important is for you to stand on those mistakes, to walk away from making those mistakes again and learning how to get a better trader, how to handle the risks better the next time. But you're going to have to make mistakes. That's normal, okay? But with time, you're going to learn to get better at assessing the risk. And from what I can see right here, I don't see that much of a risk. I see some risks for us to even get there, and this is why my stop loss is placed below that price. But once again, this is no stop loss. What I have in here is just I'm going to put the invalidation level right at the red cross. This is a level I don't want to see price trading. I don't really give a shit. We're going down. We could very well be there in a couple hours. That's the crypto market. You know how it reacts. It's just money moving in, moving out, moving in, moving out, creating emotions, and people just trading stupidly among those emotions. Then you got rational trading. I know where the risk is actually. I know where I don't want to see the price going, and I know where I want to see the price going. I want to see the price heading there, okay? And I don't want to see the price heading there. So what am I doing? Am I putting a stop loss in here? No, I'm just putting a fucking damn alert. I just want to know if the price is going there. If the price isn't going there, I don't give a damn. Put a damn black box. If you can't handle waiting, I told you some trick to get over it. If you can't handle waiting, just put the damn black box and wait for the price to either exit to the downside or to the bull side. Anything that happens in there is none of your concern if you've been taking a bullish entry. If you're out of the market, then you just wait again. If you're a low risk profile, you don't trade the speculative area, you wait for the price to make a bullish outburst. Alright, sorry about that. So just be patient, and once again, put the stop losses when you absolutely need to. I recommend you, if you're beginners, to put stop losses just to avoid getting caught into a market move that you won't really be able to assess correctly. I mean, if for some reason the price were to go there, you wouldn't have the experience I have to assess if there is a real underlying risk to really break down and fall apart, or if this is just a stop hunting. This is experience in trading that is going to teach you those things, because I've been seeing so many market moves that I can assess pretty much instantly if there is a risk or not. And I can assess and trade accordingly. Either I'm going to trigger the stop loss or not. But you cannot be doing this right now. So I'm telling you this for transparency, just for the sake of telling you how I really do things. But you should put stop losses. And even if you have to take 2 stop losses in a row, where I won't, you have to take those, because if you let yourself go into always broadening the stop losses and pushing them further away forever, you might be doing great mistakes. You can do it. You can try to learn it, to do it the way I do, but be aware that you won't be as efficient as I am simply because I have 8 years of trading and you don't. And the fact that if you try to play that game, just play it with the lowest leverage possibly ever. Okay, if you want to try handling the higher level of risk like I do, just don't put the leverage and put it to the minimum you can and trade as low as you can. If you want to experience this, you're obviously going to make mistakes, and those mistakes must cost you the least as possible. Okay, so make sure that if you are taking a heavy amount of risks and want to put yourself into the heaviest danger, then you can do it. I agree on you doing this. That's actually a good thing. If you want to learn things the hard way, just put yourself into the heaviest risk amount, but you have to really lower the leverage to the minimum if you want to try this. Two prices, infinity or zero. Regarding knowledge, that's how it is. I mean, some people want to put a price on this, but I don't really know how much I know is worthing actually. I know how to price things in markets, but to me, some things cannot be put into market. It's like health. Healthcare doesn't need to be something that you can price. You cannot give a price to someone's health. It's basically worth zero or the infinite as well. There are some things like here, it's like education. Education is something that is for general knowledge, and that's the thing for knowledge. Okay, so what I'm doing right here is education. There's no price for education. So those who are trying to make you pay to send your children to school, really to me, it's the end of civilization if we're going there. I mean, if you want to get civilization into the next step, you want to maintain those things. I mean, free education, free healthcare, and if you're doing just this, then you are a modern economy. Okay, you just get back to heavy pricing fucking healthcare or having to pay to get your children to school. That's the end of human economy, and that's the end of mankind itself. I mean, if we just can't help each other and thinking just about ourselves and don't see the greater good at sending people to school and caring about people in sickness, I mean, we're not even humans if we're down to bestiality or just things like that and predation. I mean, if that's all we are, just trying to get money out of everyone, out of someone else, and just be richer than the average and get richer forever at no cost and spending the less, and paying for someone else's health care is just something wrong. I mean, God damn it, you can do it with what you want, but not with this. Someone else's health is as beneficiary and as necessary as your own health. Who the hell are you to decide who's going to live and who's not going to live? This is not how the world is supposed to work out. I mean, I'm for free market. Believe me, I am, but some things cannot be put into marketplaces. Healthcare is one of those. Education is the second one. You can trade anything you want, but those two things cannot be traded. And thank you again. So thank you guys for your support. Don't waste your time with the trolls. I don't myself. So thank you for supporting. I really appreciate that. But let the trolls do their jobs. I mean, if they want to lose their time, I don't want to lose mine. Bye bye.